Welcome to Mr. K's Connected podcast. This podcast series will help you understand the precious metals industry, the background, the future thereof, as well as the factors controlling its fluctuation, empowering you to build long-term wealth. Before we dive in, remember you can find the accompanying blog to this episode on our website at www.mrk.co.za. Mr. K, pure and precious metals. Now, let's begin. This week, we have a jam-packed episode for you, looking at the global markets along with some educational aspects to help guide you through some changes that happened recently. As consumers, it's very important for us all to know what's going on in the world, that it has an impact on our day-to-day lives. We have seen that it's an unusual time for the world as effects of moving through the COVID pandemic strike at the heart of many key economic indicators and trend forecasts. As you know, most countries are still recovering from COVID and has some time to go until it's all back to normal, or what we can expect normal to look like. There remain signs that the global recovery is moderating. IMF forecasts show that despite the robust recovery, growth forecasts are moderating downwards. But who's the IMF? To give you some reference, IMF stands for International Monetary Fund, which came into existence in 1944 after the Great Depression in the 1930s. It's an international organization that provides financial assistance and advice to member countries. There's 190 of them so far, and counting, working together towards international economic cooperation. So, as long as your country pays their subscription fees, they have a very powerful financial advisor and bailout opportunities if your country falls into some financial difficulties. Now, the Chinese economy has been under some pressure recently, and the continued battle against COVID, together with slower vaccine rollouts in emerging economies, are affecting forecasts. The world economy has largely enjoyed a reasonably favorable economic recovery since the worst of COVID last year. The V-shaped recovery has resulted in an unprecedented demand for goods from factories that were largely shuttered during the pandemic. Combined with logistical issues such as lack of containers, shipping issues, trucking delays, the rise of the oil price, I'm sure you guys noticed that, consumers all over the world are experiencing higher consumer inflation. High inflation is not good for us as consumers, as the cost of living gets higher as well and ultimately leads to a decline in the country's economic growth. This inflation may well be short-lived in that once supply chains settle into 2022, supply and demand for goods and services would even out. It is important to note that inflation, or CPI, has not been this high in the US in 13 years. Now, before we go on, I just have to explain what CPI is, or the Consumer Price Index, as you might know. Some call it the Cost of Living Index because it tracks how much our daily products increase and decrease by. Now, the high inflation, or CPI, experience in the US can remain stubbornly prevalent for longer and also be felt globally. The ongoing effects of inflation can also drag down economic growth and cause interest rates to rise. The effects of these concerns were born out of some clear warnings from the IMF that I previously mentioned in their recent global economic overview. With fears about inflation increasing, we have witnessed a firmer gold price, which largely reflects a view of confirming the historic role of gold in times of inflation to protect an investor against the erosion of their assets due to rising prices. Despite some caution about the expectation for the gold price in recent weeks, we have seen the metal pushing back towards its critical $1,800 mark. It's a point at which there has been some resistance, and it does show how the cross-currents of inflation fears, which push and pull the metal's price higher, tend to come up against the fears of the US Federal Reserve interest rate increases. Gold is finding itself between this push and pull environment at the moment, with silver following suit, although silver price can gain on its industrial uses over that of gold in the medium term, meaning silver is used in technology such as LED lights, touchscreens, batteries, the list goes on. The $1,800 level is an important turning point for gold. What has kept gold from breaching this has probably been the fears of rising interest rates, a relatively strong US dollar, continued rising equity prices representing strong corporate earnings, and a reduction in fear or risk buying of metals. And the booming Bitcoin price has prompted investors to see more short-term gains across more unpredictable markets and provide some competition for gold in some sense. However, the world is now seeing the looming presence of inflation as a distinct possibility. And the added issue is that the lower levels of economic growth, a period of stagflation, can occur. Stagflation is a combination of three things, namely, when there is high inflation for a long period of time, combined with low economic growth and high levels of unemployment in the country. So there's your word for today, stagflation. And the rising energy costs risks dampening the post-COVID recovery, resulting in a lower growth environment yet with higher inflation for a longer period. Investors should consider using gold and silver as a hedge in such times to protect themselves should these issues remain stubbornly prevalent. It is entirely possible that fears about rising interest rates are less dramatic, since hiking rates would negatively affect the US economy should its growth path be less certain. This is a critical uncertainty, as just how much the US Federal Reserve would use interest rates to regulate the broader inflationary environment. Whatever the outcome, the stability and track record of gold provides an investor with an important diversification. It should also be noted that with the South African rand still performing strongly at below 15 rand to the US dollar, this remains a good time to accumulate some metal holdings. And on that note, we're at the end of this week's episode. If you would like us to tackle some of your burning questions in the next episode, please email us at news@mrk.co.za. That's news@mrk.co.za. That's it from me. Cheers. Please consider sharing this episode with anyone you think might benefit from the information therein. For more information on our bullion products, visit our online store, where you can find the full range of Krugerrands and bullion bars on offer. We also buy gold, silver, and diamonds with an easy and transparent process. I look forward to connecting with you again soon. Until next time, have a golden day.